So today in this video, I'm going to introduce you the best two stocks to buy today. These stocks are showing good performance on a technical basis. The fundamentals are pretty good themselves. And then I'm going to flip over. I'm going to show you what news is happening with these stocks, okay? So other than that, I want to welcome you back, fellow speculators, to Stocks Now, where super performance begins and opportunities await. So let's go ahead and get a move on because time is money, okay? Okay guys, so the first stock that we're going to go over is WTI, which is W&T Offshore Inc., Energy and Exploration and Production. Apparently the energy exploration and production are doing really well today, so the S&P 500 should be doing pretty good. I haven't looked at the indices because I don't like to look at the indices during the day. I just look at the stocks and what's going on. So there still is rotation. I mentioned this on my market update last night about energy exploration production coming into rotation here with money coming into it. So other than that, this stock is looking really well right here on a technical theme. I'm going to go ahead and just annotate this for you and show you exactly what you need to look for and what we're looking at. So we got a nice 25% increase in the prior uptrend here. So prior uptrend is well, let's see here. Well, I'll tell you what, I'm just going to do this right here. So the prior uptrend, we got greater than 25% from low to high up here to $5, from about $2.15 to $5, which is actually double that. We are in a nice stage 2 accumulation phase here. So this being right here, we do have nice demand all around here. Pumping this stock up, especially off the 50-day moving average right here, off the 10 and the 20 as well. So it's great to see that. Matter of fact, you can tell by the longer term, the shorter term moving averages being above the longer term moving averages, okay? As you can see all that right there. That's great to see. That means that we're swimming with the institutions in this. We are in a stage 2 accumulation phase. Let's see here. So the next, what we're looking for is we're going to base count, and this is going to be a primary base right here, okay? So this is going to be your first base within this stock's price cycle, okay? So that's what we want to see. Matter of fact, and then the other thing that we're looking for is the pattern. So what pattern do we have developing on this chart here? Well, we've got a nice rounding bottom. You can also say maybe a cup with a handle here, or just a cup with a handle here, the handle being right here, okay? But this is nice and rounding here, so this is good to see. I love rounding bottoms or cup with handles. They're the probability of them actually breaking out and being successful to the upside is pretty high. So other than that, we've got we're going to look at the price structure. So what's going on with price? Do we have low volatility? Do we have any price contraction? We have price contraction here, and we have some price contraction here. Okay, so within the handle, that's good to see. Within the handle, you always want to see contraction in price within the handles, okay, or in points that are pulling back in the stock while the stock is moving up this right side of this base, okay? So we have a couple of spots that are doing that, okay? So price contraction means just price from high to low is just going in a tight range, okay? As you can see, $3.88 to around whatever that is, $3.54. Same thing, $4.80 down to $4.18. So decent price contraction you usually want at around let's say anywhere between 5 and 12% is a pretty good, nice tight contraction, okay, range for price. We do have price working off this 50-day moving average and the 20-day moving average, okay, meaning that we do have demand as that price gets down to that 20-day or the 50-day moving average, pushing that up. That means we do have institutions in here buying this stock for an intermediate term and a shorter term profit, okay? Next, what we're looking for is where are we at relative to the 52-week highs. The 52-week highs being at $5. Well, we've already breached the $5 mark, so we've already breached the 52-week highs right here, okay? So at $5, the high today is at $5.14, okay? So as it's breaking out of that handle, it's moving up past that $5, and we're at $5.12 right now. Next thing that we look for is volume. Well, where is volume? What is volume doing relative with the price? Okay, so as you can tell, as the price dries up right here, we do have volume decreasing right here, and this is good. This is what you want to see. You want to see volume dry up as the stock goes in a contraction range. Okay, that's just telling you that price and volume are matched and they're equaling each other out, and they're just compressing. Okay, and so what happens is it acts like a springboard. So when you get volume that comes in, well, look, as this price right here, this nice price range right here, you see this volume, boom, look at price just comes in, boom. It allows for demand to overtake that supply, past supply, and move that price on a line of least resistance. That's what that's about. Okay, it's like electricity, same thing. Okay, so it gives it the flow, and as you can see, we had 4 or 5 days of really nice buying right here. Okay, so as we're looking at volume, what we want to see it increase as it's running up this right side of the base, and it's increasing as it's running up the right side of the base here. Okay, and then what we also want to see is we want to see volume increase as it breaks out of these nice contraction ranges, okay, in price. And this one, of course, is breaking out of this nice contraction range right here with nice volume, with volume increasing over this 50-day moving average. Okay, that's good to see. It's telling you that we have demand, and it's going up to 52-week highs, surpassing that, overtaking it. No support or no resistance back over here on the left. So that's good to see. It's overpowering all that supply, or what was supply, now becoming demand. Okay, so this is great to see. So this one has opportunity to go ahead and move up really hard right here. Okay, and then the next thing is that we look for our pivot points. Well, where are our pivot points? We have one down here at around $4.33, and we have one right here within the handle right here at around $4.95. That's the super pivot. Okay, that's a super pivot, and that's what we want to see. We want to see those super pivots being breached like that, because it gives more leeway, no resistance, where the stock, when demand comes in, overtakes that supply. Line of least resistance is taken and devoured, and it can move. Okay, so that's what we want to see with this. So our super pivot is right here at $5 or at $4.95. We're good. We breached. Where you want to place your stop now, place your stop accordingly to the low of today or the low of the contraction period. So really, I would place at the low of today, give you a nice $4.88 right here. So $4 and around that price. So you want to go 3 cents below the low, which is at $4.95. You can actually place it about 15 cents below that, so you can place it about $4.80 if you'd like, or you can go ahead and just cover this gap, because this was a gap up this morning. Price disconnected from the prior close or yesterday's close and gapped up. Okay, so the low of today, as you can see, didn't even close the gap, so that's good to see. So where you'd want to place it, maybe at $4.80 would be a good point. So how you're going to position size, according to the position sizing calculator, let's say you start off with $1,000 account here. You're willing to risk 1%. Let's say you're willing to risk 5%, because you're going to probably be using your full $1,000 if you think you want to, or whatever. I don't recommend doing all that, but let's just say you're going to use the full $1,000, and that's your total account equity, because you don't have much. So your dollar willing to risk or lose on the trade is $50. Your buy point, you're going to buy at $5.12. Come down here, your stop, you're going to place your stop at $4.80. Okay, so this gives you a stop loss of 6.25%. That's a really good stop. It's a nice tight stop. If you want to move it to that low of today, 3 cents below at $4.92, you can tighten that one up, and you're going to use more cash, but you can't really do that just due to the fact that unless you change, I think, what you're willing to risk on this. Okay, so let's go ahead and say 1%. and that'll give you, okay, so it's all a numbers game here. You got to work with the numbers, okay? So as part of it, so let's go 4% instead. So 4%, so 3.5%. So you're willing to risk $35 or lose $35 at 3.5% on percent willing to lose, okay? So position size is going to be $896 if you decide to use that stop. But if you want to give it some more leeway, which I recommend, place your stop at $4.80. So your stop is going to be at $4.80 right here. Sorry guys, I'm kind of moving along a little fast here. I got some things that I have to accomplish today that I really need to accomplish and get this off my mind. So anyway, so we're going to use 5% real quick. So you're willing to lose $50. Your position size is going to be $800. Your stop loss percent from your buy point to your stop is 6.25%. Percent and profit target, you're looking at 18.75%. So you're looking at around $6 for your profit target in dollar terms, okay? So if it gets up to that point, you can take some cash off the table or profit off the table. And if you think this stock has more room to run, buy it on the pullback. So when it pulls back, don't buy when the price is going down. Buy when the price starts moving up out of that pullback, okay? You want to buy it when it reaches the high of that pullback, and then move your stop up to the low, about 3 cents below that low of that pullback. So kind of like this right here. So I'm going to show you right here how this would work if you were going to do that. So let's say this stock takes off here, moves up. So just hypothetically right here, moves up, boom. What's going to happen is it pulls back, it reaches your profit target, you take some profit right here, but then you decide, well, I think this stock's got more room to run, so I want to keep it, and I want to go ahead and buy on these pullbacks. So you're not going to be buying when the price moves down. You're going to be buying when this price starts moving up and breaking out of the top of that pullback. And then you're going to move your stop accordingly, 3 cents below the low of this pullback. So you're going to be buying right here as it breaks that resistance of that pullback and moving your stop up to that support where that of that pullback, okay? And that's how you do that. And you just keep on doing that because it may do this right here, pull back again to support right here, and you place your stop up. Go ahead and buy some more if you still have conviction that this stock is going to go, and just keep doing that right there. And that's how you do that. And that's how you buy a stock, manage your risk, and keep that winner running. Let your winners run, cut your losses short, okay? That's how, or cut your losers short. That's how that goes, okay? So that's how you make money with these stocks here. Other than that, let me go ahead and save this. I want to save this to the annotated charts here, and then let's move on to the next, which is FRGI. This is Fiesta Restaurant Group, Consumer Discretionary Restaurant Bars. Consumer Discretionary did come in on my scans yesterday for sector rotation, so it's good to see. Other than that, the technicals look really good for this stock as well. So as you can tell right here, we are in a nice, we do have within this base, this will be your primary base. This is what's called a base on top of a base. You have this base right here, which will be your primary, and then you have this base right here, which will be your secondary base. But as you can tell, with this base, this cup with handle base right here, we form this other kind of like a flat base right here, and this is what's called in William O'Neill's How to Trade Stocks, or How to Buy Stocks in Good or Bad Times. Great book, recommend that you read it if you want update. You know, if you want to learn how to really trade. I mean, this is, you know, I mean, I'm showing you how to do it anyway. So this is really how you trade, and this is what, you know, all the best traders do right here, okay? So this is a base on top of a base. You got this base right here, and then you got this flat base, kind of sits right on top of this primary base with this secondary base, okay? So that's what that's about. That's called a base on top of a base. But we do have this nice 25% uptrend right here from low to high, from the low of the primary base to the high of starting of the secondary base, okay? So what we next examine, we examine the stage. Well, where is this stock at within its stage or the cycle of the stock? And we are in a stage 2, accumulation. This is where you want to be buying. This is the higher probability trade, okay? So this is a stage 2 as well. You can see we do have demand all within this stock, as you can tell, tons of demand. And still the shorter term moving averages being above the longer term moving averages, as you can tell right here. But the shorter term right here are starting to come in and move up above this 50-day moving average, which they should be pulled up today because of the price action with itself, as this stock is already up 12.29% as we talk about it. Okay, so nice stage 2 accumulation phase right here. Next thing that we're looking for is we're looking for what base and what pattern are we developing in that base. Probably patterns develop in the base. That's what you want to see, okay? So right here we've got a nice flat base. Flat base meaning that you have support down here at around $12.50, and you have resistance right here at around what's that, $14, $15, okay? And of course we're breaking right out of that resistance zone, which is good to see. And we did get past a lot of resistance right here. The high today was $15.62. As you can tell right here, the resistance, a lot of resistance was right here at $15, and we're breaking out of that. Hopefully today, when you're buying this stock, if you do decide to buy it, you want to wait until the close, okay, or near the close of today, because you want to see this stock close above that $15, okay? That gives you more conviction that this price could go up tomorrow or within the next few days or the following week or two, okay? So that's what we're looking for. Being swing traders, we're looking for those moves that are the next meat of the uptrend and are taking off, and we're waiting our time limit. Usually when we're waiting for the stock to do its thing, we wait for at least, you know, maybe 2 to 20 days, because we want to see that price action is actually following through, and that our analysis is correct, and we can give that stock some room to run, okay? So when you're swing trading, you're going to be holding a run for anywhere from a day to 4 months. I mean, that's really the objective, okay? It's an intermediate term trading style, okay? It's a really good trading style. It's not day trading. Sometimes it feels like it's day trading, but it's not. But other than that, so that's what you're looking for with that. Next thing that we're looking for is we're going to look for, well, price. What's going on with price within the pattern and the base? Do we have a contractional period? Do we have that nice tight range where price is just in this range, just flowing at least 10 to 12%, okay? And yes, we do right here. We have a nice tight contraction period right here within this flat base, especially right here on this part of this pattern, of this flat base pattern, okay? So we do have a nice contractional period. Not only that, price is working off this 200-day moving average, okay? That's good to see. We have buying right here off the 150, buying right here off the 200, buying right here off the 200 again. And today we're moving out of all of this resistance, okay? So price is decently close to the 52-week highs at $18.52. I actually like this just due to the fact that it's a little ways away from the 52-week highs, because you can get more oomph out of the stock, because if it really has some go, it's going to go and get up to that $18.50. So you're looking at, you know, about a 20% profit right there if it gets to that $18 if you're buying now, okay? So the next thing that we're looking for, well, what's volume doing within that contraction period or within this base? Do we have volume drying up? Is it increasing while breaking out of the base? Is it breaking out is it increasing while breaking out of the 52-week highs? Well, let's go and look real quick. We do have a nice volume decrease right here. Volume does dry up. Volume dries up all around here, and you can see this is it's a true pattern. It's true to the nature. It's true to its volume. It's true to the price action. Okay, so that's good to see. That's what you want to see. You want to see correlation with that. You don't want to see high selling volume and like this right here in huge down days, you don't necessarily want to see that, but you don't want to see it crack that support level is what you don't want to see. You don't want to see the support being cracked on high volume. Okay, meaning that price is breaking through this $12.50 area on huge, on high selling or high supply. Okay, so other than that, we do have volume breaking out of this resistance area. That's what you want to see. Volume is increasing, really nice increase. And I'll go over the news, and there's a reason why this is happening, because they did report something today or yesterday that they're doing, and I'll go over that here in just a little bit. So other than that, your super pivot where you're looking for within this contractional period or within this base or pattern, you're looking for pivot points, and pivot points are just price ranges or resistance and support levels that need to be cracked before or approached and cracked before buying or selling a stock. And where you're going to be buying right here is that $15 level is going to be your super pivot. This is where a lot of contractional period, as you can see, every time buyers get up here, there's sellers that come back in, they sell for a profit right there at $15. Same thing, boom, right here. Then it kind of just inches down and just kind of stays right there within that $13, $14 level right here. And that's also a super pivot too. As you can tell, it gaps up over that, and not only that, surpasses this super pivot right here at $15. Okay, so where you want to place your stop, how you're going to manage your risk when you're doing this here is, well, that's not what I want to do. This needs to be turned into purple. Hold on one second, guys. Sorry about that. Okay, so next thing that we're looking for is risk management. Well, how do we manage the risk on this? I recommend placing your stop below the low of today at around $13.83. Okay, so how would that look when you position size accordingly to this here? Let's go look here. So let's say you got $1,000 account, you're willing to risk 5%, you're willing to lose $50. Okay, your buy point, let's say, is going to be at 1508. And your stop is going to be placed at, where did we say that again, at the low? So at $13.99, we'll place it at $13.96, 3 cents below the low of today. Okay, I like that 3 cents area. So stop loss percent is going to be 7.43%. Your profit target in percent terms, you're looking for 3 times your stop loss, is going to be 22%. So that's pretty close to that $15 or that $18.52 level. So really close. This is excellent. This is what you want to see right here. Your profit target is going to be about $18.44. That's where you want to be starting to take some profit off, which of course what could happen. Let's go ahead and look right here. I'll give you a quick go through right here. What could happen is this stock takes off, gets up to that $18.44 or $18.50 level, and then pulls back and kind of creates a handle, goes into a contractional range right here, okay, for a little while. Don't get nervous about that. If you still have conviction on this stock and nothing's showing you that there's sell signals like large selling with price action matching that large selling, so and it's not cracking the highs or anything of that nature, the today's highs not cracking the yesterday's highs and stuff like that, showing improper price action, then you could sell. You can go ahead and just sell your whole position right there and take your profit and get out. So you'll be good on that. But other than that, we might create a handle and it might kind of like dip down, go sideways, or just dip down a little bit and then kind of spring back up and do this right here and then continue its journey on up. Okay, so just like the trade on WTI, do the same thing as you're pyramiding up and your position sizing accordingly and moving your stops following those pullbacks, the lows of those pullbacks. Okay, so that's how you would manage your risk and position size and keep your wealth going. Okay, keep your money growing in this stock. Okay, so other than that, let's go ahead and move on to the fundamentals here. So WTI, it's not even ranked within its competitors because this is more of a penny stock here. The industry group rank is 2 with a group relative strength rating of A+. This is excellent. The earnings per share percent change last quarter was 175% with 2 quarters of earnings per share acceleration. Great to see. You always want to see earnings earnings acceleration on a quarterly basis. Okay, that's good to see. That's just telling you that it is increasing with the earnings per share on a basis, okay, on a quarterly basis. It's great to see. So percent change in funds owning the stock has been 5% with 1 quarter of increasing fund ownership, with accumulation distribution rating being a B+, meaning that funds are in this stock, they're eating this stock, they're coming in, they're buying the stock. That's institutions, hedge funds, whoever has the money, even insiders, such as like, CEOs, CFOs, COOs, people like that. Management's buying. Okay, so that's good to see. They are accumulating these shares as we went over on the chart. Next one, let's go over FRGI. I'm trying to cut this video a little, it's already 25 minutes, I apologize. But anyway, so Fiesta Restaurant Group, this one here is ranked number 21 out of its competitors here. The industry group rank is ranked 34, really good industry here. So both of these stocks are in excellent industries. Group relative strength rating is an A-. Earnings per share percent change last quarter was 109%. Okay, their sales hasn't been great, but their debt to equity is okay at 48.9%. I don't really look at all that, but yeah, it's good to know though too. So anyway, we do have 4% change in funds owning the stock with 3/4 of increasing fund ownership and accumulation distribution rating, but D+. Accumulation distribution rating is not so great, but the percent change in the funds owning the stock and the quarters of increasing fund ownership has been good. So we do have institutions coming in here buying this stock, or insiders or hedge funds buying this stock here. So you are swimming with the big fish, okay? And that's what you want to do. So let's go look at some news here. So for WTI, could the W&T Offshore Inc. ownership structure tell us something useful? So apparently what we have is we do have insiders buying this stock and accumulating their shares. I think the CEO, if we go down here and see, we don't just have institutions, coming in buying this stock, but we do have what we see right here. We know that the hedge funds don't have a meaningful investment in W&T Offshore. Looking at our data, we can see that the largest shareholder is a CEO, Tracy Crone, with 34% of shares outstanding. In comparison, the second and third largest shareholders hold about 5.5 and 3.9% of the stock. Okay, so practically what this is telling you right here is that the CEO truly believes in his company that he's managing. Probably he's putting his money where his mouth is, and that's a good thing to see. That's what you want to see. You want to see management doing that, because that's showing you that they believe in their stock. They're not going to put 34%. They're not going to go and buy 34% of their shares in their stock, and or a lot of their money in the stock, and with the expectations of it going down. No, they expect it to go up because of development, because they're developing. They see something, they know what they're doing, they see something happening, and they know what's happening, and they know that it's an opportunity for them to make some money and to become even wealthier. That's what's going on with that. Okay, so this is what's happening. This was news yesterday talking about this here. So it's not just because the reason why this price is moving up today is, it's not because of this right here, it's because of this right here. It's because of oil, crude oil, West Texas Intermediate, up to 75.57 right now as we speak. Okay, crude oil Brent, same thing, moving up as well today, having a really good day. Crude oil, West Texas Intermediate, and Brent. Okay, that's the reason why oil and gas have been moving up very well. Okay, as you can tell, natural gas, boom, nice uptrend. Crude oil, nice uptrend, nice uptrend. Okay, that's the reason why. It follows the crude oil. It follows oil. Okay, those prices in those stocks tend to follow the futures market, and that's usually what dictates their share price. Is that and it's not just because of news stories, it's because of the commodity prices themselves. It's becoming as prices increase, well, of course their share price is going to increase too, because they're going to be making more money as they dig for oil, as they drill for oil. Okay, that's how that works. So other than that, let's move on to Fiesta Restaurant Group real quick. This one is a little interesting here. So they tweeted this morning, we made the strategic decision to sell the Taco Cabana business to allow our leadership team to focus completely on accelerating Polo growth. And we're very excited about the tremendous growth opportunities we have for the Polo Tropical business. So what they're doing is they're selling their Taco Cabana. They're selling that side of the business. Apparently, that side of the business hasn't been making them any money. Okay, and so they want to get rid of it, and that's what they're doing, which is a really good strategy. It's strategically placed right here. They see that the sales aren't increasing for Taco Cabana. They're not making any money on Taco Cabana. Instead, they're cutting their loss and they're moving on to what's selling. This is strategy. This is strategy within a business. This is what you got to do. You know, that's very interesting coming from the CEO and the CFO or for management to do this, because they know what's selling and what's not. You got to do that. You can't be with a company that's going to be selling product that's not selling, because it's not even selling any product. They're not making any money. So why do you even want to try to, you know, trade in that company or invest in that company that their management can't even see that? You know, apparently they don't care. Apparently they're infatuated with themselves or something, or, you know, they just dismiss it and deny what's going on internally with their business, you know. So they're letting, you know, they're letting other sectors or other pieces in their company just degrade without, you know, doing anything about it. Well, these guys are taking on, they're taking on that part. They're taking on that project instead of allowing this company or their, you know, little subsidiary Taco Cabana, you know, bring them down. They're cutting it. It's just like the stock market. Same thing. If your losses are, if your stock's moving against you and it's hitting your stop loss, well, why won't you get out? Instead, you just keep on letting it build up losses. So you're just going to let your money go down the drain? No, don't do that. And see, that's how they're doing it. Same thing like with a bad marriage. It's how bad, when you're in a bad marriage or a bad relationship, if you know it's bad, why are you going to stick with that? Why would you stick with something like that? Don't do that to yourself. You're hurting yourself. And you're going to look back and you're going to say, what the hell was I thinking on this? What was I doing all those years that I suffered and made myself suffer and feel bad, took the life out of me. That's how that works. It's just life. It's the same thing with stocks. It's the same thing with a company. You want it to grow. You want it to flourish. You want it to do good things. You want to make money with it, okay? And you want to sell its product. You want people to know about it. You want to help people with it. And that's what that's about. And so that's what they're doing here. They're helping their company big time by cutting this one out and getting rid of Taco Cabana and selling it. Okay, so they're cutting their losses, moving on to bigger, better things. So this company looks pretty good. That's an interesting storyline. I do like that because it's the same thing with trading and life in general, okay? So other than that, I'm going to go ahead and leave it off from right here. Thank you for watching. If you haven't subscribed, please do. Leave a comment, like the video. If you have any questions, I'll be more than happy to help you. I posted my Patreon link down below. Also, I posted another link called stockmarketmentor.com. I'm helping this guy, Mr. Dan Fitzpatrick. He's an excellent trader. He's been around in the trading industry for years upon years, for decades, let me put it like that. And he's done work for John Bollinger. And if you don't know anything about John Bollinger, search it up in the Google search bar. Very interesting guy, and has one of my favorite, actually has my favorite technical indicator or overlay on a chart. I don't show you any of that because it doesn't really matter. But if you want to figure it out, figure it out. It deals with volatility. You can find those volatility contraction patterns or those volatility squeezes, let me put it that way, with the Bollinger Bands. It's what they tell you. It's a statistical measurement. And he's also been featured on several news channels. He's good friends with Jim Cramer. Has been featured on there several times with Jim Cramer's Mad Money show. So, I mean, I'm fortunate to be doing work for this guy and to be able to maintain contact with him. So other than that, I posted his link to his website down below. Go check him out. He's a good guy. But other than that, great guy, matter of fact. Other than that, thank you again for watching, and I hope you enjoyed the video, found it educational. I'll be back for a market update or market analysis here in a little bit. But other than that, thank you again for watching here at Stocks Now and TSC. We trade in the present, we study the past for knowledge, and follow the process of trading to build our futures. So other than that, opportunities awaits, my friends.